So you've probably heard all the buzz about clean energy, right? Well, nuclear power is making a massive comeback. But what if you could invest directly in the fuel that powers it all? Today, we're going to dive deep into a really unique financial vehicle that totally blew the doors open on the uranium market for investors, and, in the process, became a huge market-moving force itself. That's a question that used to be really tricky to answer. For decades, getting your hands on, or at least getting direct exposure to the price of physical uranium was just about impossible for most folks. Yeah, you could buy shares in mining companies, but that's a whole different ballgame. So, how did they finally crack that nut for a new generation of energy investors? All right, first things first, let's set the stage a little. Why on earth are we all talking about uranium again? Well, after years of being kinda in the penalty box, a powerful new story has taken over, and it's reawakening the entire nuclear industry and, of course, the market for its fuel. And yeah, this quote right here, it really nails it. The big engine behind this whole revival is the global push to decarbonize. As countries get super serious about their climate goals, they're looking around and realizing that the 24/7 carbon-free power you get from nuclear, well, it's not just a nice to have anymore. It's an absolute necessity. Okay, so with all this new excitement, there was a big problem. Demand for nuclear power was clearly set to grow, but the way you could invest in its fuel, uranium, was pretty much stuck in the past. And that presented a real headache for anyone who wanted to make a pure bet on the commodity itself. Let's break down the old way of doing things. You could buy stock in uranium miners, right? But then your investment is tied up in their performance, their management, how good they are at digging stuff out of the ground, all those operational risks. What if you just believed that the price of uranium, the yellow stuff itself, was going to go up? Getting that direct, pure play exposure was the real missing piece of the puzzle. And this is where our story really kicks off. This is the game changer. In 2021, a new player entered the field with a very simple but incredibly powerful mission: build a direct bridge between investors' money and actual physical pounds of uranium. And here it is, the Sprott Physical Uranium Trust, or as you'll hear it called, SPUT. You'll see it under the tickers UU or UUN. Now, this isn't a miner. It doesn't explore for anything. It doesn't run a single facility. Its one and only job is to buy physical uranium and hold it for its investors. Simple as that. So what Sprott did here was absolutely brilliant. They took an existing uranium holding company, completely restructured it, and created the world's largest, most easily traded fund for physical uranium. They didn't just join the market. They pretty much created a whole new way to play in the nuclear fuel game. Okay, but how does this thing actually work? I mean, how does cash from your brokerage account get turned into a drum of uranium sitting securely in a licensed vault somewhere? Well, the mechanism behind it is surprisingly straightforward, but believe me, it is incredibly powerful. This right here is the engine of the whole operation. It's called an at-the-market, or ATM program. So here's the cycle. When investors get excited and their buying pushes the trust's share price above the actual value of the uranium it holds, that's called trading at a premium, the trust can then issue brand new shares right into the market. Investors snap them up, which gives Sprott a pile of fresh cash. They take that cash, go into the spot market, buy more physical uranium, and lock it away. It's this incredible self-reinforcing flywheel. And look, their rulebook is super simple, super clear. The trust's own rules say it must invest at least 90% of all its assets in physical uranium. That's it. The other 10% or less can just be cash to cover expenses. There's no fancy derivatives trading here. This thing was built to do one job and one job only: buy and hold the metal. Now, the creation of this trust didn't just give people a new way to invest. Oh no. Its actions started to make huge waves across the entire uranium market. This impact became so big, in fact, that traders and even the utility companies started calling it the Sprott effect. And this number? This is why it got that name. $1.3 billion. That's how much cash the trust raised in just its first few months. And with that, it went out and pulled over 24 million pounds of uranium straight out of the spot market. To give you some context, that's more than some entire countries mine in a year. And they didn't stop. By the start of 2024, they were holding over 63 million pounds. This was a massive new buyer that didn't care about price in the traditional sense, and it completely changed the supply-demand picture, almost overnight. And this isn't ancient history. This is happening right now. Just look at this 2024 trading data. You can see the incredible volume. Tons of shares trading hands every month. That means it's super liquid for investors. But here's the important part. That liquidity lets the trust do its thing. When the share price trades at that premium we talked about, Sprott is out there buying. In just the first quarter of 2024, they bought another £1.5 million. So every tick of that stock is a potential signal that more uranium is about to get taken off the market for good. So, here's the bottom line. Every single time the Sprott Trust uses its ATM program to buy more uranium, it's like a giant, flashing billboard for the whole world to see. It's a public, transparent signal that investment demand is so strong it's actually removing physical supply from the market. It has become a real-time barometer for the health of the entire uranium sector. And that is why everyone, from hedge funds to the big nuclear utilities, watches Sprott's every move. When you zoom out, what this trust really did was create a direct connection that just never existed at the scale before. It lets the full weight of investor opinion be felt directly in a physical commodity market, a market that is absolutely critical for the future of clean energy. And that really raises a fascinating question about the power of financial innovation, doesn't it? Well, in the case of uranium, the answer seems to be a resounding yes. The trust didn't just offer a new investment, it literally became a core part of the market's structure, driving price discovery and acting as that undeniable signal of demand. It really makes you wonder, where else could a tool like this completely change the landscape?